saying. And again, you've got a risk on market, risk on asset. In other words, you've got such confidence in the global economy that this is up and up and up. Now, like I just said a minute ago, you had immense global confidence after you had COVID. Okay, COVID caused this basically escapism to the US dollar and also Bitcoin. Then you had the same thing where everyone thought, wow, this is great. You know, the global economy is booming. And then suddenly what happens is you get this unforeseen event. You get something, that catalyst, that negative catalyst that brings it wildly down. And within a couple of months or 3 months, you've gone from 68,000 to 33,000, 50% fall. Now, again, I'm not saying you can't go higher here, but I'm saying you are, you know, the longer these things go on, the more you're running the risk of having that fall, of having that negative experience where the price comes back immensely. And you can see your 38 fib only rests around 48,000. Okay, so that level there, a 38 fib is not that far on a retracement. Okay, something like your 61.8 or further gives you much more long side value if you absolutely have to trade this. Now remember, it's a HVA, and you know it's completely up to you whether you trade it. But if it was this high and it was me, you're well above now the all-time high. Look what happened last time you got above that all-time high, you fell. The point is, if you have money on the table, and I say it to everyone who holds these things, if you've got cash there, take the money. Take the money, and then when it falls, rebuy if you have to. Okay? If you'd done the same thing there, okay, you would have made money that time. You might have made some on that one, but you would have banked all the profits higher. So even if you longed on this second point here, okay, and the market falls, you've already got 3 times gains. It doesn't even matter. You could probably even close it out and be up overall. So you just got to do what traders do when they are profitable, and that is taking their money when the money is there over and over again. If you do that, you can't really go broke as long as you're taking profits, protecting your risk when things go against you. Now, if you're shorting it, you're going to have to be really careful because, again, your risk needs to adjust. You've got this risk on market, you've got this momentum against you if you're shorting. So it's more likely your stop will get hit if you're using stop losses. All right? So just be very careful with that. If you're going to short it, it's got to be minuscule, and I mean tiny, tiny, tiny size. Anything large here, and you are just really putting yourself out there to get just crunched. So just be very careful. So you want low risk because there's a risk on market. You're trading against momentum. If it does fall, I would just consider locking in gains. And it looks like a centipede or a millipede, doesn't it? Imagine the millipede. As you go through the legs, it locks in gains more and more. It eats more of the profits. It goes through its stomach. Whatever you want to say about it or arrange it in your brain is up to you. But the fact remains, every time I trade all assets, I trade the CAC, I trade the Ors, I trade the FTSE, I trade all currency pairs pretty much, or at least majors mainly. I like taking money when it's there over and over again. I don't want to take the risk. Yes, it could go higher, but the odds of that are diminishing the longer you wait, because eventually it's going to fall. If you wait longer and longer and longer, you're giving more time to the fall to occur. So you've really got to be careful with that. I'm not saying it can't go higher. I'm just saying it's better to rebuy on a fall. Like I said, all right? Rebuy on falls, do it over and over again, and you'll find things get a lot better for you. Okay.